trying to find the beginning of the, where is the dang thing? Well, anyway, I like to cover real trade examples for everybody too. Trying to find this, I thought it was page 15. That was an old deal. Here we go. The older I get, sometimes I forget things. It's hard to find. Anyway, welcome aboard, traders, to our live session here for Trading Week Ahead. I'm Ken Calhoun, president of Day Trading University and Trade Mastery, coming at you live here on a Saturday with markets rallying to all-time new highs and free commissions. We've got a lot of new capital, new monies coming into the market from people who have a lot of retail traders who have not yet traded and opened up their little $500 accounts here and there. So that's undoubtedly helping push the markets higher. We are due for a pullback at some point, so do be prepared for that, possibly as early as next week. As always, all information is for educational use only. So let's start by looking at the market. What's going on? Our S&P is breaking new highs. We gapped up yesterday. Market has done a lot of gap nothing type of days. Yesterday wasn't one of them. We got a gap that finally started to wind higher into the close. And so for that reason, we want to see which of the charts are most likely to continue to run for us. Again, another big turnout. Thanks to all of you for showing up here on a Saturday. You're to be commended for taking a little bit of time out of your busy schedule to take a look at what's hot and how to trade it. Anyway, let's take a look at a few of the charts. First of all, the S&P, we broke the 3,100. If we get back under, say, that 3,100, and if we start to wind back down, especially if we see two red days in a row, we may be due for a pullback. And support S1 on the pullback is technically, it'd be 30.30. 30.30 to 31.10, this would be support S1 level if the market drops, right? So we may go down. It may keep running up to 31.60, right? Wouldn't surprise me. One of the clues to look for is, instead of looking at the S&P chart, look at one of the ETF charts like the spiders and look for this pattern where you've got an increase in volume accompanied by a decrease in price. So if you see two red candles and they're losing support and volume's ticking up, that tells you may be on the edge of a cliff and watch out below. Zzz, boom. Hey, I'd like to ask, I'm curious, how many of you think that the market may be due for a pullback sometime soon, like next week or the week after? Say, give me an I. Type in yes if you agree that the market may be due for a pullback. Now, I've been thinking that for the last few weeks, and frankly, I've been wrong. I thought the market was going to pull back a couple weeks ago. It didn't. It continues to inexplicably run up. It's bubble time in the stock market. So almost everyone says yes. Okay, I'm seeing all these yeses scroll by. Okay, thanks, folks. In process. Good headline on China war. Yeah, remember there's that big quick spike a couple days back with the negative China news. It only lasted a little bit, and then the market dropped quickly, and then it recovered a few minutes later. So in previous months, that would have led to a drop in the Dow of anywhere from 1 to 300 points. We are not seeing that kind of weakness. So for whatever reason, the bulls are in charge. So the market can stay irrational longer than we can stay solvent. So let's make sure that we're on the long side. I did buy me a little bit I purchased for myself a few shares in TQs and SPXL and what else? There's one other I bought yesterday into the close on the breakout, just in case it keeps running. But it's smart to hedge. So if you're looking for hedges, you want to be like I'm in a few shares of SQ. I've been lightening up on the way down, so I'm in less than 50 shares now. But if it bounces, this and some of the VIX ETNs may be good for a pivot. But we want to focus on strong charts. If we take a look at our sectors, biotechs and pharmaceuticals continue to lead the way, and sure enough, our pharmaceutical and biotech sectors were up the most lately. Okay, and other sectors varying degrees of strength, but the lead sector continues to be in the health industry. Okay, and speaking of which, if we look at two really good charts to follow. Bristol Myers is one, and CVS, again, both in the health sector. The healthcare sector is a really good defensive player, a good, I won't call it a value, but it's not a momentum sector like the tech stocks. It's a slow, steady growth play. And so whether you're looking for plays in instruments like Disney that really shot up, right? The Magic Kingdom. I love all things Disney. Big fan. Well, it doesn't show up on this chart. We had the big epic run up, but what do we have after that? The mean reversion. So whenever you see a big run up or a big gap up, you often see a 50% retracement. So Disney, the mouse's ears, a little bent ears. So maybe good for a play if it gets back down to 135, 138 for a pivot. But Disney had the big run up on the subscriber growth news. We have a bearish upper shadow here in this red candle, secondary red candle. I wouldn't be too worried about this pullback though if you're a Disney trader and investor, because the volume of yesterday's pullback was half the volume of the previous day, right? And that's much less than the buyers on the earlier day. So anyway, really good volatility in these instruments. Another good one to keep an eye on is CVS. This is a really good play going all the way from the low 60s up to 74. For those of you who trade these types of instruments, one thing that you'll find in general as a rule of thumb is that moderately priced stocks are really good for swing trading. The cheaper stocks are much more haphazard and risky. And it's an unfortunate truth that a lot of people who have small accounts tend to gravitate towards cheap stocks because they erroneously think that's all they can afford. I would a million times rather see you trade even 10 shares of a $70 stock with a great trend than 100 shares of a $70 stock that's up and down and all over the place. Remember, your capital allocation, you've got so much capital per trade that you want to allocate. It's fine to trade small size and scale in. What you're really after as a trader is making bigger winning trades more often. And to get there, you need to trade consistent charts that have good directional volatility, not the pop and drop cheap under $10 momentum stocks, because that's gambling and we don't want to gamble. We want to be the house. We want to have an edge. We want to have a clear advantage. Our thesis as professional traders is that volatility leads to additional volatility and new buyers lead to additional buyers, at least until they don't. And the party's over and you see a 2 red candle pullback like this. I got a bearish engulfing right there. And just for the first time, just saw that. You know, I'm a trader. That's what I look for. Bearish engulfment led to the pullback, right? That'd be fine to sell there and rebuy if it takes out a new high, which it did. There's, especially with no commissions to pay, you have no excuse not to re-enter your trades or scale or position size. Put a little more work into it. You know, traders for years have asked me, how can I get more consistent? How do I avoid getting shaken out? How do I avoid taking big stops? The answer is all, like Sosnoff says, trade small, trade often. That's the correct answer. Like I say, and have for 20 years, trade wide, not deep, meaning I won't say spray and pray. Well, you don't do that either, but you want to throw more darts at the market. Law of large numbers combined with correct position sizing helps you overcome the cost of stop losses. Combine that with one of the equally important things is making sure you're trading the right charts that have great potential for breakouts that'll continue. So I don't like trading things over $100 a share. If you do trade cheap charts, here's a good example of one that I thought might be interesting to you, MBT, the ticker. We got a bullish cut breakout here. Got large green, always be on the lookout for large green volume days. One of the best precursors I found in, I won't say every single one, but a great majority of my recent winning trades. And I've had so many, right? How much are you guys making a lot of money? I hope so. Well, a lot of my recent best winning trades have been because I confirmed price action with increasing volume. Traders vote with volume, the 2 V's to remember. Well, volume and volatility are the 2 V's, but the point is trade volatile directional charts, but make sure that they have increasing volume because that's drying up the supply. And then you just scale in above the breakout. So anyway, It's so easy to make money as a trader if you know what to look for. But it takes experience, right? Those of us who've been around for a while. Hey, quick reminder, I'm going to be doing for those of you who are options traders, I'm doing a webinar with my colleague Larry McMillan, the top expert in options, who literally wrote the book, this coming Wednesday. So I will be putting a link in my Twitter feed, and I will be sending out an email shortly, sometime probably Monday and again Wednesday, or at least Monday, with the link for that. So Larry McMillan and I will be sharing the stage this Wednesday. So if you're an options trader, I'm interested to hear what Larry's got to say, and so should you. So be sure to join us for that. What else do we have going on? There's that CVS chart. CVS, an especially good breakout chart. As always, we like to pay attention to the ratio of green to red candles. And we want charts that are majority recent green candles in an uptrend. Very basic, good price action swing trading strategy. Be cautious with ones like this Taiwan Semi, right? We have all these red candles at a gap reversal because we had a doji on the gap day, which is relatively rare. Usually you have a big green candle day on most gaps, right? I mean, most gaps in the world for history, most gaps are green days. If you see, however, that's another quick technical tip, of thousands I've got to share with you once you join my All Access Pass, right? And join me 6 days a week, or as many days as you want each week of the 6 days. If you see a red doji on a gap day, that often is a bad sign. And so I will often fade the gap or tighten up a trailing stop if I'm already long. So if you see a doji on a gap day, that means they're uncertain about gapping the price up, right? So for that reason, I would sell on a loss of the doji support, and that made sense. What else is going on out there? The VIX is way down at 12. One thing you can look for, let's see if I have time to pull this up. When it comes to reversals, be on the lookout for MACD and RSI reversals, right? And we can use the MACD histogram, adds additional clarity. See, the uptick was here when the red signal line crossed the green line. Here we saw the red cross the green, but it's pulling back down and it's not lifting up. So that's a sign that they were trying to get some buyers in the VIX, but it's not holding yet. So what you want to do when using the MACD, just a quick tip, a quick technical tip is make sure that that red line holds above the green line. That usually leads to a spike up. So the crossover is the first sign. If it's a nice sharp crossover off a drop to the support down here. And so we did start to see that. So that may mean the volatility the VIX may be going back up because we have a MACD minor crossover. What I want to see is a nice separation. If you see a nice wide angle separation after the red signal line pivots off of support and crosses above the green, that often tells you that you may have a pivot in play. And that's true for any instrument you trade in life, not just the VIX, but I follow the VIX closely because it's another good instrument. You can also start using your RSI for overbought, oversold. This is not telling us anything, right? This is a middle of the road, so we do not have an oversold signal on the RSI. If it dropped down here to the 20% mark and then started to bounce, then you might have something. So we still are in a low volatility. Although it feels like a high volatility market from a VIX standpoint, the VIX is still getting crushed. A lot of short interest in the VIX futures on the SIBO, so for that reason, we want to stay clear of the inverses until we start to see some reversal patterns emerge. But I hope that helps. Those are the kind of smart thinking you got to take into the trades. Make sure that you are focused on charts with big profit potential. Like yesterday's LK chart, right? Nice consistent run up. The great thing about trading these type of charts is that unlike the under $10 low float stocks, this one doesn't get circuit breaker halted all the time, right? Another reason not to day trade the cheap stocks, especially the low float ones, is you get circuit breaker halts, which often gap against you, and that's out of your control. And that's just plain gambling, so you don't want to do that. Inexperienced young traders who've only been trading for 5 or 6 years, you know who they are, who are out there on social media all the time saying, let's day trade $5 stocks. I get the percentages are big, the volatility is there, but the risk is also irresponsible to tell people to trade cheap stocks because the risk is too high. The volatility for the cheap stocks is there, so the reward potential is certainly there, but the risk that accompanies that in terms of having to be split second and trading thousands of shares in big stops is horrible. And I hear all the horror stories, and I inherit a lot of traders who start off with some of the momentum guys and realize that's gambling and not smart to trade. When it comes to professional breakouts, you want to learn from guys like me. And Harry Boxer's brilliant. He's the other great breakout trader I know out there. Harry's absolutely brilliant. I'm a huge fan of Harry Boxer. He's one of the, if not the best stock picker, one of the best out there at thetechtrader.com. He's a colleague and consider him a friend. He's a great guy to learn from as well. Learn from those of us who've been around the block a few times. Those of us who've got at least 20 years experience, right? Nowadays, it seems on Instagram especially, everybody and their brother's a professional day trader, blah, blah, blah. Ask for tax return proof that they actually had a profitable year. Oop, you won't hear that. Ask for proof that they've been around for 15, 20 years, like me. You won't hear that either. So make sure that you choose your mentors and choose who you learn from wisely. Learn from the people who've been around for a while. Go to events like the Money Show events. I regret not having gone to the Vegas, spoken at the Vegas one recently, but my schedule's been swamped. My voice is going. And so am I in just a minute. We're going to wrap up here. Anyway, folks, if you want to learn more from me, go to crushwallstreet.com. That'll take you to this page where I've got a sale. And I don't do these. Last time I offered this at this low rate was back in June, I think it was. So I only offer this. You get all 4 of my best-selling alert services, me in the live room. You can ask, lots of questions. You learn with me for a whole year for just $9.97, which is cheap for the 400 hours of training you get with me. I'm a trading industry. I'm the real deal. I'm a professional with tax return proof that I've traded millions of dollars worth of stocks. A bonus that I'm adding if you order before tomorrow, and also retroactively, anybody who ordered All Access anytime this year, you also get these bonuses. You're welcome. You get a private 30-minute phone call with me or a private GoToWebinar if you want to go through charts, which I would recommend. But you get a half-hour coaching call. That's retails at $500, so you get that included. And again, you schedule that anytime next year. No rush or anything. Sometime starting late January, early February. After you've had a month or two with me in the live room and you got some experience under your belt, feel free to get on the phone. And I'm very helpful, professional, honest, authentic. I'm here to help. I've been doing this for decades with thousands of traders, so I've got some experience. The other thing I have is a performance/satisfaction guarantee. If for any reason you're not happy with the All Access Pass, nobody's ever taken me up on this, everybody's been thrilled, but if for any reason you're not, I'd be happy to rebate back your entire investment in downloadable course credit. So, if you don't feel like you made at least $1,000 in winning trades or avoided $1,000 in stop losses, or you just got tired of my frickin' voice and you're not happy for any reason, you don't like the color of my shirt or something, any reason at all, or you're just in a grouchy mood or something, just let me know and I'll be happy to give you $1,000 credit towards any of my courses at tradingvideos.com. They're best-selling. I've sold thousands and thousands of courses. So anyway, that is a great deal to take advantage of that. Go to crushwallstreet.com. That will take you to this page, and it goes through all the different benefits that you get. And honestly, it's a great deal. I mean, one of my traders, a longtime trader and friend Barry, had said, I charge you way too little for this. And that made me think too, there's no back end. Unlike other people that try and, charge low prices and they try and upsell you into some $10,000 hoo-ha or overpriced $2,000 course crap or that kind of thing. I don't do that. There is no back end. There is no upsell. There is nothing else that I offer. This is my best and brightest, smartest, best value. You have my word on it. I'm worth learning from. So, or I'll let you be the judge of that. I honor my traders because you folks are smart. Anyway, you can see videos telling you about what's there. And thanks to all of you who voted me #1 in the world author last year for intraday for the articles in stocks and commodities. I got tax return proof. I've done almost 5 million in a single year. And that was a decade ago. I've learned so much since then, right? So anyway, do join me. And thanks to all of you who've been joining me. I appreciate it. I've been trying to get the webinars all lined up for everybody because I got so many new orders. But that's it. That's my pitch. And it's a great deal. So if I do say so myself, so I hope that you'll take me up on it. That's at trademastery.com/all access. Or you can just remember crushwallstreet.com. That'll forward you over to this page. So tell a friend too. If you want to do me a solid, I'd appreciate it. Let's see. I will tell you though, I don't have much time for a ton of questions because I got the, and yeah, Mira, I use the default settings for RSI and MACD because everyone else uses it. Hey, Jack's asking, considering the year package, do I take vacations? No, I'm a workaholic trader. I don't even speak at the Money Show events this last couple of years because I have so many new customers and I'm a one-man band. I'm an army of one by choice because I'm grouchy and I don't like people, so I don't like employees. So I do it all myself. I work my butt off. Good point, Oksana. Hey, thanks, John. Yeah, I think it's due for a big drop. Hey, that's the other quick tip, too. I'm a stone cold expert in trading the inverse ETFs, though not lately. I've been taking stops on the way down. I take stops like everyone. I screw up, too. I'm not perfect, right, by any stretch. Just ask my wife. Bada bing. But the point is, I am a reasonably experienced guy who's been trading the inverse ETF since I profitably traded the VXX on the flash crash day over a decade ago. You can see P&L proof screen cap on my www.tradingtalk.com forum from 11 years ago. So I've been trading the inverses for over a decade. And if the market does crash, I'm the go-to guy for how to trade VXX and SQQs and TVIX and all the rest of it. My biggest winning days early in this year and late last year were trading TVIX. Not so much this past month or so, but the point is if the market does do a big drop, I'm the guy you want to learn from because in the live room and in my swing scans, I'll cover the specific entries and live exits for those instruments whenever the market drops. So on red market days, that's another benefit to being a member with me. So, hey, Bill's asking what trading platform. Historically, I've used Interactive Brokers the last, almost 20 years, but now I use Fidelity because I don't like it. I want free commissions and I don't want to use some light version of a trading platform. That's not suitable for day trading. You do not need, by the way, you don't need a direct access broker unless you are trading thousands of shares for scalping cheap stocks. But for those of us who like to do normal day trading that's a little more relaxed or swing trading, I highly recommend TD Ameritrade is my #1 choice recommendation, and Fidelity would be a close second. They're both world-class outfits. They're reputable. Never, ever try and skirt the pattern day trading rule by joining some sketchy overseas broker like some of these guys who are in bed with them and try and get paid off by referring people to them. Go to some place that's reputable, like Ameritrade or Fidelity. They're your friends. They're American brokers and world-class, right? Makes sense. What else? I think we're going to wrap. A lot of questions. For a smaller account, are there brokers that let you trade more than 3 days for every 5 rolling days? Oh, hey, Jeanette, how you doing? It was good talking with you yesterday on the phone. Yeah, just to use it, put the trade in. The thing is to beat the PDT, trade in a cash account, and you can usually do that with the phone call. Say, hey, can you change my account from a margin account to a cash account, and then trade small shares. So as long as you have unsettled cash, you always got to keep an eye on that, by the way, so you don't get a good faith violation. But as long as you keep it small share size, like 10 or 20 shares, you can do 10 trades a day in a under 25K account as long as you're trading cash. And most traders don't know that. But as long as you're using unsettled cash, now it's not suitable if you're trying to trade 3,000 shares 10 times a day. You probably want a margin account for that unless you got a 7-figure trading account in cash. But for folks with accounts, say 5 or 7 or 10 or $15,000, you can easily day trade those, 5 or 10 times a day, which is plenty, as long as you're using cash. And I advocate using small share size while you learn. So 10 shares, 20 shares, learn it. It takes so many years to learn. It's not something where you can learn how to magically trade in 3 months and become financially free like some of these idiots out there try and say. It takes a long time. So while you're learning, use a cash account, small share size, and you can, I won't say beat the PDT, but be compliant, because the pattern day trading rule applies to margin accounts. So if you trade a cash account with small shares, you can practice, 5 and 10 shares. And that's how I recommend the world's traders. I need to write an article on that and publish that, or a YouTube video, but trade in a cash account with small share size during your learning curve. And then if you're able to build your account over time, then you can get back into a margin account and hopefully get over that 25K hurdle. But in the meantime, just trade a cash account, small size. That's the right way to learn how to day trade. You have my word on it. That's very important. I wish I had known that back in the 90s. So, hey, Eileen, good question. Can't help you with Canada. I feel sad for my Canadian friends, guys. So many, some of my best friends and colleagues are Canadians. They're brilliant people and nicest people in the world. Anyway, but the problem, I don't know. I called the Ameritrade even to ask on behalf of you folks, can you do anything for folks in Canada? And they said no, because the regulations there, the financial regulations, for whatever reason, they can't do commission free. So sadly, I don't have anything for non-US residents to get commission free trade. So if anyone from Canada finds a workaround, let me know. I'd love to hear from you. Anyway, I've got swing scans coming up in a couple of minutes. Do please consider joining my thing. I'm giving you a personal phone call, giving you a satisfaction guarantee, at least a credit back, full rebate credit towards my other stuff. If for any reason you're not happy, I know you'll be happy because I'm very hardworking and honest, and I answer all the questions. And I like to give you specific entries and exits and very well thought out trading plans and strategies and insights and technical trading tips to help you make it. So crushwallstreet.com. And I'll see you guys next week. Do well. Be ready for a market reversal. And if the market does drop, I'll be trading SQs and TVIX and VXX and UVXY and SOXS. Those are my favorites. Lab D too sometimes. But anyway, be on the watch for a market pullback. But if the market keeps rallying, don't be afraid to jump in like I did yesterday. So we'll see where it goes. Hey, you're welcome. Question, what's the longest hold on TVIX for a bounce, or should I take a loss now? I can't give advice by law on individual trading. I can tell you what I did was I was in like 300 shares back when it was like 13, and I scaled down 50 shares at a time on 2-day low breakdowns. So I scaled out. I bought a little bit into the close yesterday, just 50 shares. So I'm only in 150 shares. TVIX and the other VIX ETNs, because of contango and the way that it erodes the value, you don't want to hold them longer than a month or so, more than a couple weeks actually, without scaling. So when I trade the inverses as well as the directional plays, I always use position sizing. The price that proves a trade right for a swing trade is a breakout close above the previous day's high. And the price that proves a trade wrong that should be scaled out of, like 330 or 4, is if it's closing under the previous day's low. So the 2-day pattern, this is kind of an extreme one, but take a look at TQs, for example. As long as TQs, if you're swing trading TQs, I bought a little bit into the close yesterday. As long as it stays above the previous day's high, you stay the course and stay long. But if you're in something that's down, like let's say SQQQ or TVIX or whatnot, the price that proves a swing trade wrong is a close under the previous day's low. So for that reason, I lighten up on those trades. I do my maintenance work on trades like any professional trader between 330 and 4. You always, when you're swing trading, do some maintenance work, some either adding to the trade or subtracting from the trade right before the close. Ask any Wall Street trader. That's what we do. You trade into the close for maintenance on swing trades. By maintenance, I mean deciding to add capital or subtract capital out of that position. Okay, so another quick tip, a word to the wise. Anyway, thanks everybody. Appreciate y'all for being here.